Robert, what are you thinking about the likely impact of this latest rate cut on the Ugandan currency for a start?
The impact is that we are seeing some drops on the base lending rates of most of the commercial banks, which are averaging about 21%, 22%. But it is still felt that these are high, and the banks feel that their loan books are still at charges that are high. They borrowed money at a high rate, so they don't feel that they should be going less than 20%.
The market sentiment, Robert, appears to be very somewhat bearish regarding a strong Ugandan currency. 2,540 is where it was averaging last week. Where do you see it heading?
Please say that again.
The currency against the Ugandan currency against the dollar is somewhere around 2,540. What are your long-term views on this? Let's say for the next month or so.
Yeah, of course, with the reduction in the lending rates for the central bank to 13% from 15%, we're likely to see a flight of offshore investors. This is likely to result into further depreciation of the shilling. So I wouldn't be surprised if it went to 600.
But the other side of this rate cut is there appears to be a growing appetite for credit. The Bank of Uganda statistics say in the last month or so, it increased to about 730 billion in July.
Yeah, of course, with the fall, because you'll find that the rate has been coming down over the last 5 or so months, meaning that the rate at which banks are willing to lend might have come down. Some banks might have been lending towards the end of the year last year to as high as 40%. Now, you will find that now the rates may be coming down to levels of maybe 30% or even slightly lower. So, yeah, it is understandable if the appetite for loans is growing, and a result will see further economic growth as businesses get money to be able to kickstart their businesses following the tough economic times of last year.
So the credit appetite may be growing, but how about the interest rates? This latest rate cut to 13%, do you think commercial banks will follow that cue and also lower their interest rates?
Yes, they've started lowering them. Like I said earlier, the average rate currently is about 21%. So we are likely to see slow easing towards interest rates coming a bit lower, but banks borrowed money expensively earlier this year and late last year. So before they can really lower the rates to levels that are satisfactory to the central bank, we are likely to see them stay as high, which the central bank currently is not happy with.